All right, hi everyone. Welcome to today's live analysis session brought to you by IC Markets. All right, as today we'll be doing a live analysis and we have the live chat going on as well. So please drop all your requests in the chat box over here. Okay, let's just okay. I think we're a little early. Let's just wait for a minute or two for everyone to to start tuning in. All right, just want to make sure you can hear me loud and clear. And you are seeing my screen as well, which should be showing IC Markets webinar, live analysis session, 3rd July. All right, okay. Right, I think we can start. We can start today's webinar. All right. Okay, so as usual, we have the disclaimer as well. Any information in this video does not contain and should not be construed as containing investment advice or an investment recommendation or an offer of or solicitation for the transactions in financial instruments. All information presented is presented as educational material only. Risk warning, and do take note of the risk warning as well. CFDs are complex instruments and come with a high risk of losing money rapidly due to leverage. Right, you should consider whether you understand how CFDs work and whether you can afford to take the high risk of losing your money. All right. Okay, so my name is Ketan Rameshchandra. I'm an investment analyst here at Everest Fortune Group. So this webinar series is brought to you with a special partnership between IC Markets and Everest Fortune Group, where we have been the finalists for Best FX and Equity Research in 2019, 2020, and 2021. All right. Okay. Okay. Here, before we start off today's session, just take note here the key economic events coming up this week. We have the Reserve Bank of Australia releasing their latest cash rate statement on the 4th of July. We have FOMC meetings, the minutes of the FOMC meeting being released on 5th July. And then we have labor data coming up this week. Two sets of NFPs coming up, one by ADP on 6th of July and the main one by the Bureau of Labor Statistics on 7th of July. All right, hi Amar, good to see you again. All right, okay, so let's just take a look at the calendar first off. All right, hang on. Okay, right, okay, so here I am on Forex Factory. All right, thanks Amar. All right, okay, here I am on Forex Factory. I'm on GMT time. So my calendar is from, hi Jamilu, good to see you again. Right, so I'm on GMT time and I'm showing the calendar from last Friday till today. Right, okay, just a quick recap of what happened last week on Friday. We had the PCE price index from in the US. This is an inflation measure. This is actually the Federal Reserve's preferred gauge of inflation, together with the CPI data from the Bureau of Labor Statistics. And we also had the revised or the finalized version results from the University of Michigan Consumer Sentiment Survey, where the key part of it was inflation expectations was falling, right? So if you look here, I'm going to highlight this here. The year ahead, inflation expectations receded for the second consecutive month, falling to 3.3% in June from 4.2%. So this data point, combined with the PCE price index retreating as well. So both the headline reading and the core reading for the PCE price index were retreating. So they are coming in lower than their previous the previous month's reading. So that's good, because that means inflation is receding. It's slowing down. So that means the central bank, Federal Reserve, does not need to be overly aggressive, and that is why the dollar sold off aggressively last Friday. Okay. And just to take note of some of the events coming up this week. So tonight, okay, because tomorrow is also 4th of July in America, it's Independence Day. So US markets will be um, closing earlier than expected. So I believe they should be closing at about what time is it? 5 p.m. GMT, right? 5 p.m. GMT. They should US markets should be closing, and then we also have ISM data out at 2 p.m. GMT, and then of course, as we mentioned earlier at the start, we have RBA announcing their cash rate uh, on the 4th of July, 4:30 a.m. GMT, where they're widely expected to maintain interest rates, right? The current cash rate is at 4.1%, and because last week's inflation data out of Australia uh, was very soft, we can see inflation cooling in a big way for both the headline and core reading. So it's very likely that the RBA is going to maintain or keep the cash rate on hold. Then we have the FOMC meeting on 5th of July, coming up at 6 p.m. GMT. We also have OPEC meetings starting on 5th of July. This is very important for oil as well. Any new announcements with regards to production cuts would have a big impact on oil prices. And of course, we have ADP non-farm payrolls on 6th of July at 12:15 p.m. GMT, and then we have non-farm payrolls by the Bureau of Labor Statistics on 7th July, 12:30 p.m. Okay, so with that, right, okay, and also if you guys have had tuned in earlier this morning as well with Desmond, right, for the pre-market analysis, you can also catch uh, the write-up of the analysis in on IC Markets blog. Okay, so if you click on the blog, go to IC Markets and click on blog, you should see today's article as well, Monday, 3rd July, where the analysis for all the major pairs and gold, oil, as well as indices will be covered in detail here. All right. Okay. So, if there's no requests, then perhaps we can start off with the dollar index, okay, and then we'll flow down into the other major FX pairs, and then we'll also look into gold, and then probably round up with oil and maybe the indices as well. And of course, do drop your your request in the chat box, right? And I'll be happy to go through the analysis with you for any of your requests. Okay, so here we are on the DXY chart. I'm on the 4-hour time frame. Okay, so as you can see, we have identified the various support and resistance levels based on the 4-hour chart. So as mentioned earlier, so last week, 30th of June, we had soft inflation data coming out of the US, the PCE price index. So that is what caused the big sell-off in the US dollar, which of course would drive down dollar index. And naturally, euro would rise, cable will rise, and so on and so forth. Okay, yes, dollar yen. Hi, Jamilu. Yes, definitely. We'll definitely cover dollar yen as well. Right. Okay. So we saw dollar index fall last week from 103.40 to go as low as 102.76, and then it retraced some of the move. And today, this morning as well, during the Asian trading hours, we saw dollar index falling as well, but we've seen it reverse pretty strongly during the European trading hours, right? So it does look like um, dollar index, despite the softer inflation data coming out of US last week, its price, the dollar index has actually reversed during European trading hours or at the start of European trading hours, and it does look like it could push higher as the day progresses. Right? Okay. We can also see there's a nice trend line as well. If I were to draw here, yes, we probably have a pretty decent trend line as well. So we can see that we are price bouncing off once and twice along this trend line, ascending trend line. And we can see that although price did break through the first support um, last week, and then it was just acting as a resistance earlier today, and then it finally broke out, and now this first, what was previously the first resistance is now the first support. Yeah, has now become the first support. Okay, so in terms of support, okay, we have also oh, okay, this is not up. Okay, let's do the analysis together. All right, for this, okay, we have done the Fibonacci here. Should I do it from here? No, this, okay. So on this leg of the move, we've done Fibonacci retracement from the swing low on 27th of June to the swing high on 30th of June. So let's see if we can see, yeah, okay, so we can see 38. Okay, hi Calvin, yes, okay, we'll cover Aussie as well. Okay, so if I were to go to, here we go, all fibs, okay, we can see 38 and probably just, okay, so let's just keep 38 and 61. Right, okay, so we can see the 38 Fibonacci retracement level line up with the first overlap as well, the horizontal overlap here. If we zoom out, we can see how this horizontal overlap was also identified as a support level. So we can see price reacting of this level here on 3rd of April, then being acting as resistance again on 17th of May, then support on 21st of May, a brief support again on 13th of June before finally breaking lower, then resistance on 23rd of June, and yes, and now that is why we have multiple instances where price has reacted off this level, and it also lines up with the 38.2% Fibonacci retracement. Okay, and then on the lower side, we can see the second support here at 102.70. Again, we can see multiple instances where price has reacted off this level. And it also sits just under that 61.8% Fibonacci retracement level. So this is, I would like to highlight this as a zone, right? Where's my, right, okay, here. So I like to highlight this as a zone because we can see clearly here, uh, over the last few hours or since Thursday, price has reacted off this level pretty uh, a couple of times, right? On 29th of June and as well as on 30th of June. So you can see price bouncing off this zone two times last week. So that is why this zone between, I would say 102.70 and 102.78 or 102.80 is our second support zone. Okay, to the upside, we have this first resistance. Again, by using an overlap as well, we can see price finding support here back in the middle of March and also running into resistance last week. And of course, it lines up with the Fibonacci retracement as well. So we've done the Fibonacci retracement from this swing high on 5th of June, going down to the swing low on 22nd of June. And we can see that 61.8 and 78.6%, these retracement levels line up well with the overlaps as well. So we have two factors contributing uh, to identifying or to the identification of these two resistance levels. Okay, so do take note of that. So despite last week's softer inflation data, and also despite dollar index selling off earlier this morning, it has reversed and is rising higher, and it's quite likely because today on the calendar is pretty quiet. Oh, okay, we do have ISM manufacturing data coming out later today at 2 p.m. GMT. So this is likely to show the US economy or the manufacturing sector of the US to remain in contraction territory. And also we are likely to see prices being subdued as well. So that means inflationary pressures in the manufacturing sector should be receding. So this would likely to create some negativity for the US dollar. So it is quite likely we may see dollar index continue to rise now until 2 p.m. GMT, where we have a potential for a reversal to take place, right? It's quite likely that the data will be coming in uh, pretty soft, meaning that manufacturing PMI is going to indicate contraction again, and we are likely to see the prices index as well retreating. So the combination of these two economic data points could likely provide some catalysts for the dollar index to stall and perhaps reverse and drop towards the first support. Okay, so do take note of these levels and the upcoming um, economic data point this evening, right? ISM manufacturing PMI at 2 p.m. GMT. Okay, so let's slide on over to dollar yen first and Aussie dollar, right? Okay, so we can see here, do we need to update any of the levels here? Right, okay, we can see a nice bullish channel as well, starting on middle of June. You can see the dollar yen has risen from 140 to as high as 145. It is rising very nicely within this bullish channel. So we've done a Fibonacci retracement from the swing low on 13th of June to the swing high on last week on 29th of June. Okay, let's just for an example pull up all the Fibonacci levels to see if there's any other levels as well. Okay, so we can see that we have the expansion, Fibonacci expansion at negative 27.2%. This lines up well with the second resistance. We have the 23% Fibonacci retracement that lines up with the first overlap support, and also we have the 38% lining up very nicely as well. Okay, so we're going to keep just 23, 38, and we'll keep negative 27 as well. 23 and 38, and I will also add negative 27. Right, okay, so if we were to zoom out a little bit, we can see that the second support was also chosen because of a nice overlap here back on middle of September of last year. You can see dollar yen finding support at this level at 142.80 multiple times last year before finally breaking low and then going back higher again. So this is another reason why 142.77 is a important second support, because we have two factors, the overlap here and the 38.2% Fibonacci retracement. Likewise, for the first support, we can see the dollar yen having a nice V-shaped bounce here back on 4th October, right? It bounced off this level at 143.85 to make to go on to make its all-time high. I think this is, if we zoom out on a monthly basis, you can see that this was actually the last time dollar yen reached this level was, yes, see, almost 30 years ago. It's like a 30-year high. The yen had devalued so much last year that it had reached a 30-year high, 30. All right, let's just zoom back in onto the 4-hour chart. So, okay, so we can see, yes, first resistance here. We can see an overlap, a very nice overlap as well. One time, second instance, third instance where dollar yen found resistance before breaking out. Of course, it did break out briefly here on 22nd of September. And then you can also argue that in October, towards the end of October, it did find support above this zone a few times, right? 1, 2, 3, roughly 4 instances where it found support above this level. So that is why this is identified as a major now resistance level, right? Since price is coming back up, this is what was previously support is now a resistance level. And the second resistance was identified by using the negative Fibonacci expansion. And we can also see some uh, overlap here. If we zoom in a little bit, you can see there's some decent overlap here as well. Price finding support at 146.77 and then running into resistance a couple of times before breaking lower. All right, so this is dollar yen. All right, so do take note as dollar index. Oh, right, okay. If dollar index, naturally, if dollar index is rising, we expect dollar yen to bounce as well, right? So this is what we saw at the start of today. Where is it? Where are we? This is 4-hour chart, right? Yes. Okay. So actually, dollar yen had been pretty strong this at the start during Asia trading hours, despite dollar index selling off because of the monetary policy divergence between Bank of Japan, who are keeping their interest rate at negative 0.1%, while of course we know the Federal Reserve is maintaining interest rates at 5.25%, right? So because of this divergence in monetary policy, we have seen the dollar yen. Let me just zoom out onto a daily chart first so we can appreciate the move more clearly. We can see since bottoming in middle of January. Dollar yen made a first strong bounce up to 137, pulled back uh, in March as well, and then before resuming its upward trend again. Right, this is one of the primary factors or fundamental reasons for this move here is due to the policy divergence between the Federal Reserve and Bank of Japan. All right. Okay, so do take note that we are still in a bullish channel for the dollar yen, and these are the immediate support and resistance levels thus far. Okay, then we also had a request for Aussie. All right, let's look at the Aussie. Now, this is, of course, because we have the RBA releasing the latest cash rate announcement on July 4th, 4:30 a.m. GMT. So naturally, we want to know what are the support and resistance levels for the Aussie. And of course, as we get closer to the date, we're going to see some changes in the levels as well. Okay, so right. So we have a Fibonacci retracement here done on the swing high on 16th of June to the swing low last week. Of course, this is now no longer resistance. What was previously resistance is now support. So we can update this together, right? So let's just change this now to our first support. So 66.37 is our first support. This price broke through this level last week and has managed to stay above it. Naturally, the second resistance is now our first resistance. Wait, let me bring this up here. Right, we can see that this level has acted as a resistance and support multiple times since 2nd of May, right? And this is okay. I think we can choose. I think I'll still. Okay, I think wait. I would like to still keep this as my second resistance because I actually see a pretty decent overlap here as well. And I see the nice overlap at 66.69. All right, so you can see a nice overlap here, and it comes all the way back till 17th of May. So I would like to use this as my first resistance. As you can see, clearly price has reacted off this level today as well. And let's see if it lines up with any Fibonacci retracement. Perhaps could it be the 23? Okay, it's just above the 23%. So let's just keep it on for now, because we can see that this is a immediate resistance zone as well. So we have a nice overlap at 66.73, which sits slightly above the 23.6% Fibonacci retracement as well. And the second resistance is also identified by an overlap and alignment with the 38.2% Fibo as well. Okay, and on the support side, we can see the recent swing low here on 28th of June. It serves as a nice overlap as well. We can keep this as an intermediate overlap, intermediate support. And for the first major support, it'll be using this level at 65.68. If we zoom out, we can see that price has reacted off this level on 8th of March a few couple of times, finding good support here before bouncing higher. And you can argue as well, again on 28th of April, price found support above this zone before going higher again. And then also, of course, on as recently as 5th of June. So there is a strong support zone between starting from 65.68 going up to 65.94 as well. All right, hi Jamila, I see a request for dollar franc. We'll get to that after the Aussie. And for the second support, it goes all the way back to 4th October where price ran into resistance, and then it found support here briefly, and then acted as resistance. So this is how we're using it as a second support. Let's see if we can do a Fibonacci. Oh, we can also do, let's see, yes. Is there anything here? Oops, hang on. Let me just do this bit properly. Right, okay, we see 78.6% here. Okay, just as a guide, it doesn't line up exactly well with any of the overlaps, but if you can just keep it here um, as a potential guide to telling us that okay, there is some strong support around this level, let's just see, can we use Fibonacci projection to identify any other potential levels? Oh no, this is wait, okay, we don't need this now, sorry. Let's see, can I, okay, maybe I'll try to do it. Oh wait, hang on, let me clean this up. Let me just keep, in this case, 78.6. Yep, let's tidy things up a bit here. Right, okay. And then, oh, we say, okay, I don't need this projection anymore. It's not valid. Okay, we can try and do a projection from this swing high to here. We'll try and see if there's any. Okay, 78.6 lines up quite close, not exactly to where the first support is. Oh, sorry, to where the second support is, not the first support. Hang on. First support. Sorry, this should be seconds. We don't need, this is way too far. This should be second support. So okay, so hang on, sorry. So let's recap. Okay, first support is at 66.37, of course. We can also see a nice overlap here. Actually, I'm going to get rid of this intermediate overlap, and I think I'm just going to label this as my second support. Right, we can see a very nice level here. Okay, right. Yeah, because otherwise that would have been too far away, right? Right, okay, so we've tidied up the chart. Okay, so we can see the second support sits slightly above the 78.6% Fibonacci projection level. You can see two instances where price has reacted off this level. And the first support is at 66.37. First resistance is at 66.73, which lines up close to the 23.6% Fibonacci retracement. And the second resistance is also an overlap that lines up with the 38.2% Fibonacci retracement. So if dollar index, okay, although dollar index looks to be falling in the last 4 hours, but if it's going to continue rising, then naturally the Aussie is going to fall, but it may likely find support around the first at 66.37. I think because of this potential data that's coming up later today at 2 p.m. GMT, it's quite likely we may see the Aussie find support. If it does drop down to this level over the next couple of hours, it might find support down at 66.40, 66.30 before reversing to bounce higher, right? So do take note that if the ISM manufacturing data remains in contraction and the prices index continues to fall, we are likely to see the US dollar sell off, and hence we may see a reversal in the Aussie dollar as well. All right. Okay. Now let's move on over to dollar franc. Okay. So as the US dollar sold off last week, it found support at about 89.50, and today it's bounced higher as well. It broke through the first resistance today and is in the major resistance zone as well. So we can see the wick now developing as well. Price is retreating back, and yes, similarly to the Aussie as well, we are likely to see a potential reversal in dollar franc as well, right? So it's quite likely that the manufacturing sector is going to remain in contraction in the US. So this would potentially trigger a sell-off in the US dollar, which would mean we could see a potential reversal for dollar franc between where price currently is and maybe slightly above .9, right? So do take note of this. Okay, let's see how do we identify any of the levels. Okay, first support is down here at 89.07, but I also see a nice decent overlap here as well. So I think there is uh, a case for identifying this level here as a potential intermediate support as well. So 89.45, I'm just going to label it as an intermediate support, right? So should price reverse from this level here at 89.80, and if it does continue to fall, it's likely to find some support at 89.50 in the meantime, right? So in the interim, should price reverse and drop lower, we are going to see potential support at this level at 89 um, 50. I'll just pull it back to here so that we can see. Okay, right. Okay, so we've done Fibonacci retracement on this from this swing high on 12th of June to the swing low on 16th of June. So we can see that the 61.8% Fibonacci retracement level sits slightly below the second resistance. Let's just pull up all the fibs to see if there's anything else that lines up as well. So we can see, right, okay, naturally as price moves through the levels, 20 and it knocks them out, so 23.6% is no longer valid, neither is 38. 50, perhaps you could somewhat argue that it's still sort of valid, but we'll just keep it on just as a guide, right? Okay, so we'll keep 50 and 61.8%. Okay, and we've also done let's see, yes, okay, there's a Fibonacci projection here, so done from this swing high to the swing low and then finally to here. So this projection is used to identify the 78.6% level, which is to help us identify the second support for dollar franc. All right, hi Forex Yoga, welcome. Okay, so if we just zoom out a little bit, and we can also see the second support uh, having a nice overlap from 13th of April onwards and 25th April. You can see price reacting off this level as a strong support two or three times, right, basically. And of course, it broke through here, but it's good that we see a pretty decent overlap. And we also have the second factor of the 78.6% Fibonacci projection level to back us up as a potential second support. Okay, first support, as you can see, we have multiple instances here where price has bounced off 89.08. All right, hi Turu. Okay, yes, we'll definitely go through gold as well after this. All right, okay. So do take note for dollar franc, these are the resistance and support levels with a potential for reversal to take place later today at 2 p.m. GMT. Right, okay, then okay, let's just cover euro and pound before we go into gold. So actually, okay, here these are the levels for the euro. We have done the Fibonacci retracement here from the swing low to the swing low on 31st of May to the swing high on 22nd of June, and we can see that the 61.8% Fibonacci level lines up well with the second support. No, 50 is too far. 30 and 61. No, okay, so it's just 61. All right, okay. So only 61% Fibonacci retracement is used, and we can see that it lines up well. The second support is also a strong overlap as well, because we can see a nice V-shaped bounce in price for the euro on the 3rd of April, right? Price went from 1.0912 all the way down to 1.0794 before staging a V-shaped bounce, right? So we can see that this is as acted, price has acted, reacted of this level. And even here, if I go back as far as here, 21st of March, we can see price running into resistance back then as well. And we can see resistance here, 24th of May, resistance again on 23rd of 8th of, sorry, on 8th of June, 12th of June, and finally acting as support on 14th of June. So this is why this level is a significant support. All right, hi, Bester. Good to see you again. Welcome. I hope you managed to tune into Desmond's pre-market analysis as well. Okay, yep, we'll cover pound yen after gold as well. Okay, so first support, as you can see, again, we have a nice V-shaped bounce in price. So first support at 1.0847 is a significant support level, as it's a strong overlap. And we've also done, okay, this Fibonacci projection needs to be updated a little bit. Yeah, we need to pull it correctly, but okay, maybe it's a bit too far. Yeah, so 100% is a bit too far. It doesn't really line up with any of the overlaps. I think we're just not going to keep this Fibonacci projection. We can probably do a Fibonacci retracement from this swing high on 27th of June to swing low last week. Okay, we can see the 61% Fibonacci retracement lined up slightly above the first resistance, the first overlap resistance. So we have two factors that contribute to uh, uh, to the identification of this resistance zone, right, between 1.0911 to just about 1.092325. Okay, second resistance is found here. You can see we're taking the swing high at 22nd of June and using like the support here on 4th of May. And also it lines up and aligns pretty well with the 78.6% Fibonacci retracement level done from this swing high on 4th of May to the swing low on 31st of May. All right, hi Marcus. Yeah, we're going to do gold as well. I'm just going through the euro and then we'll look at cable and then we'll move on to gold and then we'll cover pound yen as well. All right, so do take note of the levels for the euro. Okay, then for pound, okay, so price broke through uh the first support this morning, so now this is now the first resistance. Our second resistance is up here at 1.2771. First resistance is here at 1.2678. We can see a nice swing low here as well, so we're going to label this as our intermediate support at 1.2606. And then we are now going to look at and then we also have the first support as an overlap as well. You can see price reacting on this level several times. So first support is at 1.2584, while the second support is also a nice overlap that lines up well with the 61.8% Fibonacci retracement. Okay, so 1.2544. Okay, so with dollar index being relatively strong today during the European trading hours, it's quite likely we may see pound dollar retreat a little bit further, and there's a strong potential for a reversal to occur, as of course because of the ISM PMI data coming up later today. Right. Okay. And okay, let's do gold, and then we'll switch to pound yen. Okay. Wait. Since we are on pound USD, let's just go to pound yen first, and then we'll do gold after. What am I doing? Okay. Okay. So this is let's just remove everything here. All right. Okay. So let's just zoom in onto the daily chart first to see exactly where we are with the pound yen, sorry. So of course, as mentioned once again, we have a big divergence in monetary policy between the Bank of England and the Bank of Japan. Thus, we have seen the strong move in pound yen as well. Let's see how high this has reached. Let's switch to months. Okay, so this is last time price was around this level was back in January of 2016, so almost just over 7 years ago. So you can see pound yen has really reached the 7-year high, and it does look like it's going to push higher as well. As I mentioned, due to the one of the reasons would be the uh, divergence in monetary policy between the Bank of England and the Bank of Japan. Okay, so let's see. Right. Okay, so this I'm back on the 4-hour chart. Just let me see on the daily. Right. Okay, April. Okay, I think I'll just wait. Let me just do a Fibonacci retracement from the swing low on 24th of March to the swing high on 27th of June. Okay, because this is this is a 7-year high. We're likely not to see any um, potential overlaps, although it might be a bit far. Okay, let's see this. We can use this as a potential. I'm just going to label this as the first support for now. If we zoom in closer, right, okay, so this is a pretty decent overlap here. And if you stretch it back, okay, let's not go all the way back there. Okay, right, so okay, now we are back into it. Okay, so it does line up pretty well. with this reversal here on 21st of June as well. So I think this is a very important first support as well, because you can see a nice overlap, and also it has reacted off this level recently. So 180.50 would be our first major support. In terms of resistance, I would say, yes, we can see here there's a nice overlap. This would be our first resistance, but just let me line it up. Yeah, so just roughly around here, right? You can see price running into resistance here back in September of 2015 and again on December 2015. And I'll just fast forward to where we are now. Right, so we've used that overlap to identify our first resistance, which also lines up just not just below, but lines up below the Fibonacci expansion is not valid. No, sorry, we can't use the Fibonacci expansion for this. We can see, let's see if we can use the retracement levels for support. No, okay, I think just on a daily chart. Okay, so we've identified the immediate support level at 180.50 and resistance at 188.33. We have nice overlaps. Okay, so let's just zoom in onto the 4-hour chart and try and identify other levels that may be a bit more closer. Okay, so of course, naturally, the first intermediate resistance would be here at 183.79. Okay, we can also see a pretty decent overlap here as well. So we do have a intermediate support level as well at 182 exactly, right? So we're going to put this highlight this as green dotted line so we can see. All right, so in terms of immediate uh, support and resistance levels for pound yen, we have it at 182 as an intermediate support, and of course the intermediate resistance at 183.79, and we have the major support and resistance levels that were identified via overlaps, right? Significant overlaps. Okay, so this, do take note, these are the levels for pound yen, and of course because of the divergence in monetary policy, uh, we may see pound yen continue to rise higher, but of course it does look like it's going to pull back towards, at least towards this first intermediate support level at 182. Should price find support around here, it could potentially reverse and go back towards the recent swing high, and most likely it is going to uh, push higher over the next maybe couple of days at least, right? By the end of the week, if it does find support at about 182, we may see pound yen reverse and push higher by the end of the week. Okay. Um. Then yeah. Okay. Now we'll go on to gold as well. Yeah. Okay. So here we are on gold. This is the 4-hour chart. So with the US dollar selling off strongly last week, we saw gold prices rebound strongly to go back above $1,900 an ounce again. And okay, so let's try and find some uh, more actionable support and resistance levels. Okay, so price has broken through what was the support level earlier this morning, and now it's acting as a resistance. So similarly, with dollar coming back into demand during the European trading hours, we are seeing gold prices pull back, and there's a potential for gold to reverse later today as well. All right. We can see, let's see, okay, let's see what have we done here. Okay, we have done this Fibonacci projection here on these 3 points. What did we identify with it? Oh yes, okay, we identified we used the 78.6% projection level to identify, to act as a supporting argument for the first support. The first support is also an overlap here. We can see price reacting off this level at 1,890. Okay, or to be exact, 1,889.42 multiple times here since middle of February. And the second support is also an overlap support that lines up well with the 78.6% Fibonacci retracement as well. Okay, so this is support levels in terms of resistance. Again, we have a nice overlap here at 1,913. And then we have the second resistance at 1,932, which also lines up well with the Fibonacci retracement. So we have done, let me zoom in here. We have done the Fibonacci retracement from this swing high on 16th of June to the swing low on 29th of June. And of course, okay, now that prices knocked through the 23.6% retracement level, this is no longer valid. So we're going to get rid of that. Maybe let's just keep 50 and 61 to see if there's anything. 61. Okay, I guess you could argue there's some resistance here as well. But that's way too high, right? So it has to break through the first resistance and the second resistance plus this descending trend line as well to finally get to 61. So that's just way too far. So let's just keep 50 for now. Right? Okay, so you can see second resistance is a nice overlap that also aligns with the 50% Fibonacci retracement level. Okay, so right now there's some pressure on gold prices today, or rather this afternoon, or well, during European hours, and then it's quite likely there's a strong chance for potential reversal in gold prices later today, right? Okay, so do take note of these levels, resistance and support levels for gold. All right. Okay, I think we will move on to oil, right? And if there's any other requests, I can probably do another one or two requests depending on the time. So please do let me know. Otherwise, we'll just move on to oil, right? As I mentioned earlier, we do have the OPEC meetings starting on 5th of July. So it's quite likely we're going to see some volatility in oil markets as well. Okay, so let's look at oil, WTI oil in this case. Right, okay, right, David, we'll do dollar CAD as well, and we'll quickly do Nasdaq. Yeah, we did do pound dollar as well. Yeah, do take note. And this is the levels for pound dollar. Okay, since there's more requests, maybe I'll just skip oil for now, and I'll do dollar CAD. Kiwi, and then I can probably do Nasdaq as well. Okay, so let's quickly go on to dollar CAD. Right. Okay, so you can see uh, since last week Wednesday, roughly price has been ranging between 1.3239 and 1.3274. So wait, let me just get rid of. Let me do this from here. This swing high. So we have, what is this, 38%? Anything else? 23? No. No. Okay, so we'll just keep 38. Right, okay. So we have a nice overlap at the second resistance that lines up with the 38.2% Fibonacci retracement level. So that's how we identify the second resistance. First resistance, we can see a nice overlap here. And we also, is there any other? What is this? Okay, okay, so got it. And we have, this is expansion. Okay, so the first resistance is also a nice overlap as we can see here. And we've also done a Fibonacci extension on this leg of the move from this swing high on 23rd of June to 27th of June. We've used this Fibonacci retracement to identify the extension at 145%, which lines up pretty well with the first resistance as well. So we have two factors contributing to this level at 1.3274. First support uh, was at 23.6% Fibonacci retracement, but of course now since price has broken through, this is no longer valid, so I'm going to drop 23 and just keep 50, right? So we can see here 50% lines up just slightly above the second support. So yes, so dollar CAD is likely to uh, continue falling as well this week, at least to the first support for at least for the rest of the day. Okay, then Kiwi. Okay, right. Let's move on to Kiwi. Right. Okay. Quite a few levels have been broken, so it's good. Now we can do the analysis together. Okay, so naturally this second resistance is now going to become our first support. So let's change that up. And this resistance zone is now a support zone. Okay, so naturally this is now, okay, yeah, we can see a nice reversal here. So this is a pretty decent level to select as our second support. I'm going to get rid of these two. This is simply too far away. Okay, so we have, okay, so what is this? Okay, this is a Fibonacci. Okay, we also, okay, we have this Fibonacci retracement here to identify 78.6%, but okay, that's not valid, or not valid, but we're not going to use it for now. It's still valid, but we're not going to keep it on for now. Okay, we have this projection level here. This was used to identify, okay, 61, so it has bounced off 61, but let's just keep it on here for now, just to give us an idea of why we did this projection here, because we can see that it bounced. It was to put highlight the potential support at 61.8% projection level. Okay, so in terms of resistance, we can see a pretty decent overlap here as well. So we're going to use this level here as our, let's see, probably a bit lower. Yeah, okay, so this would be our first resistance for the Kiwi, right? Okay, so we can see price running into resistance here earlier today, pulling back, coming down close to the support zone, and now bouncing off, and then probably going to drop lower uh, again. Okay, for second resistance, all right, okay, I see another good overlap here as well. All right, so this, we can go to use this as our second resistance. All right, let's see if there's any other levels to identify. Okay, we can do a Fibonacci retracement from, oops, hang on, from this swing low, swing high. Can we identify any levels here? Okay, so we have 38. Yeah, I think we'll just keep 38. The other levels don't line up well. Okay, so 38.2% Fibonacci lines up with this overlap here. And yeah, okay, so these are the levels for Kiwi, right? So as we mentioned, dollar, we saw some demand for the US dollar coming in during the European trading session. So naturally, Kiwi is going to pull back. And once again, we might find support around this area, which is a potential reversal zone. And we could see the Kiwi bounce towards the latter part of the day, right? We might, oh, sorry, we're going to see it pull back first and then potentially reverse the bounce higher in the latter part of the day. Okay, that's Kiwi. And all right, okay, I do have time for Nasdaq for sure. Let's just do Nasdaq and we'll round up with that. Okay, so let's go on to where are my indices? I'll just go. All right, so okay, this is I'm using the Nas 100 as a reference for the Nasdaq. Okay, so let's just look on the daily charts. So of course, we've seen tech stocks bounce very strongly since the start of the year, right? Seen a big rebound in general in equity markets as a whole, and we've seen like stocks like Nvidia and Meta pretty much double or even gain more than close to 200% if I'm not mistaken. So we've seen big moves in share prices as well, and at the individual level and of course at the index level. Okay, so we can see right, okay, prices, we can see a nice overlap here. So price is very close to a important resistance level. So this is going to be our first resistance level in terms of support. You can see here, okay, there's not really overlap, but we can see over here roughly this would be our first support at 14,663, first resistance at 15,275. Okay, we can also do let's see, what should I do? It's not okay. We can do a Fibonacci. Yes, we can do a Fibonacci retracement from here. The swing low on 6th of Jan, the swing high on 16th of June. Let's see if there are any levels. Okay, 23 is here. So probably the second support would be around here. Okay, so we are using the combination of horizontal overlap as well as the 23.6% Fibonacci retracement level to identify the second support. Okay, so you can see price bouncing off here in May and early June, and also finding resistance back on 1st of March. Okay, so that's second support. And second resistance, I would yes, use this the all-time high back in November of 2021. Okay, so this would be our second resistance for, okay, that's way too far. Okay, okay, let's see. I think we can identify a better second resistance by using Fibonacci projection, something that's more closer and more actionable. Let's see. Okay, projection is here. I would probably do it from, okay, here. What would we get? Okay, so no, this is minus 20. Okay, 61 is way too far. Okay, maybe let's see. Okay, maybe we can zoom in on the 4-hour chart and try to find a closer level. Okay, so I'm just going to keep 23% here, and then just zoom in onto the 4-hour chart to find more suitable, or not suitable, but more actionable levels. Okay, so right. Okay, so I'm going to do Fibonacci projection from this swing low on 8th of June to the swing high here on 16th of June and back down here to 26. Okay, so by doing this, going to pull up all the fibs. Okay, so we can see that the first resistance is a nice horizontal overlap, and it of course also lines up just slightly under the 61.8% Fibonacci retracement. So what I'll do is I'm going to use the 78.6% projection level as my second resistance. Let's see if we zoom out. Is there any overlap level that we can see? Oh yes, you can argue as well. There is a pretty decent overlap here, right? You can see, right? So if we just zoom in here, yep. If we look at it in December of 2021, you can see price bounce off this level a couple of times before finally breaking through. So let's get rid of this one up here. That's way too high. Right. Okay. So we've used a combination of a horizontal overlap plus the Fibonacci projection to identify the second resistance at 15,561. We see the first resistance at 15,275. We see equity markets bouncing very strongly since last week, and it's quite likely they're going to open higher today. Do take note that today is the eve of Independence Day in the US. So US markets are only going to be trading till 1 p.m. Eastern time, and that should be about 5 p.m. GMT. So do take note, equity markets are going to close early today. I believe bond markets as well are probably going to close early as well. And of course, tomorrow being Independence Day, US markets are closed. We're not going to see any action in equities and I think in the bond markets as well. All right. Okay. So okay, so with that, I've come to the end of today's session. Okay, so do take note, these are the levels for the NASDAQ and how we went through the steps to identify it using a combination of horizontal overlaps and Fibonacci retracements and Fibonacci projections as well. All right. Okay, we'll just round up and look by looking at seeing where the dollar index is. Yeah, it does look like it's going to push higher today, at least for the next hour or so, or next couple of hours at least. And then there's a likelihood of a strong potential reversal, right? Also, do take note of the key events coming up this week. Starting with, okay, we have Canadian GDP and, oh no, that was last week, sorry. We have ISM manufacturing data at 2 p.m. GMT. Today, 4th of July at 4:30 a.m. GMT, we have cash rate announcement by the RBA. We have OPEC meetings and FOMC minutes for the June meeting coming up on 5th July. And of course, we have big important labor data coming up from in the US. We have ADP non-farm payroll on Thursday, 6th July. And of course, the big one BLS non-farm payrolls on 7th of July. All right, thank you everyone for tuning in. Yeah, really appreciate to seeing familiar faces, sorry, not familiar faces, but familiar names tuning in regularly to the live analysis and as well as for um, the pre-market analysis with Desmond as well. And you can also go to the IC Markets blog and you can read today's the latest blog as well for 3rd of July and see the analysis that was done on the daily time frame and which was also covered by, of course, by Desmond earlier this morning as well. All right, thank you everyone for your time. Really appreciate you guys tuning in and looking forward to seeing uh, all of you at the next session. All right, take care and have a great trading week. Thank you, everyone. Oh, where's the blog? Okay, the blog is if you go to, if you just go to Google and search IC Markets blog, right? Just go to Google, search IC Markets blog. You should see it right here. Okay, official blog, and okay, you can just go to. Okay, let's just go to blog, and then yeah, it'll be the first article uh, on the page. All right, so that's how you can search for it as well. And then after that, of course, you can bookmark the page. All right. Okay, all right, Desiree. Right. I hope that answers the questions. And David, all right. Thank you, David, as well. And okay, good luck to everyone. And yeah, I'll catch all of you at the next session. Thank you, and see you at the next one.